This is not financial advice, and with that in mind, let's get into the charts. So whoever is following my channel and seen the previous analysis, I'm going to try and help you get your bearings on this chart a little bit. I'm going to remove all that noise so you can see, basically you're seeing here the 4800 on the SPX, S&P 500, and that's the tumble we had over COVID and then war. So with my drawings on top, you can see immediately gaps. This is a gap. Gaps are important because the SPX doesn't like them and usually they get closed. To follow up on my previous analysis, you can see this red bubble that I'm pointing towards right here. This is where my expectation was that the price action will actually break through and we'll be able to finally test this trend line and actually close the gap and start riding on top of it. That's the same diagonal we've built coming out of here. Now, we've been following, if you guys didn't watch my videos, we've been essentially following a long-term trend, which is what these two parallel lines are. You can actually track them down. I'm going to do that with you right now. You can see they go as far as 2015. Look at the dates right here on the bottom. You can see the price action has been entangling around these two maiden lines, okay, since 2009, really, okay. So you can see this is roughly 2009. You see I have not changed anything about these two parallel lines and I've been following them all along. Here we are, 2009, and that is the maiden trend, basically the one that the price action was wrapping around all along throughout all these years, right? This is the long-term trend we've been riding on. Yes, the price action does dive below and of course goes above, but essentially we follow that main trend line, okay? This is it where we are nowadays. You can see why it is so important. The fun thing is that although the price action, just like here for obvious reasons, can deviate from that main trend line, you can see this rally. This is what we call a proper rally. But then again, it has to come back to its maiden line. Remember that these support, or rather trend lines, trend channel in this instance, right, is actually going upwards. So with time, our floor, the lowest point to where we crush to, essentially is going upwards. The reason, if you're asking yourself, again, you've seen the price action can wrap around and go far below this channel itself, right? But here, in fact, we held up very nicely. So with everything in mind, with the war in Ukraine and the supply issues we had, COVID, and all the subsequent side effects to these situations that happened, really we didn't really have it all that bad. Only that have happened is that we retraced back to that trend line and continued with sort of normal behavior of the market, testing the area, making sure we're good, and going upwards. Again, if your technicals are pointing towards that. The people in Tom Nash's community, I'm going to give a huge shout out to Tom Nash's community. This is where I'm a main admin. This is where my mainstay is. An amazing community, amazing people, discuss everything from crypto to precious metals to stocks to the crypto market, anything and everything. It's a great place for investors and traders alike. Highly recommend it, not because I'm an admin there, seriously, because it's an amazing place. Amazing giveaways, amazing guests. Literally one of the best communities you can find on YouTube that has to do anything and everything with finance. And of course, we also joke about and have just, fun channels and fun time and Discord hangouts, Zoom calls, all that great stuff. So the guys in the community, referring to the community, know I've said we will have this tiny retracement to 4,000 and 50. You guys, and I was actually voicing my worries about maybe we will test the 4,000 line. We still have some gaps left over here, and it's really difficult to say with how the market is pointed right now. And as you can see, I'm already behind my expectation. By now, we should have been penetrating this bubble at least, and even testing and closing that gap between the 4195 area and the 4228 area. So for all I was expecting somewhere around February, I was expecting that by now we will close this gap and we'll be moving forward. Now, it seems that we've moved really quickly, and I think it happened due to the fact that the Fed started becoming a little bit more dovish, and because they can't go any other way around it. They are stuck between a rock and a hard place. It's something that I've mentioned before in the community multiple times. And of course, the CPI print came in at 5. So essentially what we have now is a situation where the CPI is at 5, the interest rate is at 5, which we all expect in the upcoming FOMC meeting to go up to 5.25. So essentially we've got to this point where I've been giving this analogy in the community, where for the police officer, which is the interest rate to stop the inflation, which is the CPI, the print that we get, it needs to overtake that criminal, so he will be able to force him to stop. Essentially, this is maybe a very crude analogy. That was the analogy I was using in the community. You guys can recognize what I mean. So now the conditions are changing, and the conditions are finally a little bit more favorable for the stock market. And because we know the Fed cannot really raise interest rates anymore, because the banks are already struggling, and we can see the signs all over the financial economic sector. So at this point, like I said, they are stuck between a rock and a hard place. In my own opinion, and through my analysis, and no, I'm not exposing all the technical indicators that I'm using over here. I do speak about some of my techniques and strategies in the community on the Discord, which I will obviously have a link to down in the comments, and the info, the details for the video, I'll have it there. You guys can join the community. We have public rooms that all free members are more than welcome to participate. Yeah, this is mainly where in the member section, this is where I speak about some of my techniques and how do I analyze. I'm not gonna give those away over here, especially more or less my secret sauce. Those are things I do not speak about other than with a very particular small group of people. I will tell you that my analysis, and you can watch my previous videos, brought me to believe that we will see 4,500 before the end of the year, before 2023 comes to an end. Now, in fact, I will tell you that some parameters make me wonder and maybe estimate even that we might even see as high as 4,600 by the end of the year. Again, take everything I'm saying here with a grain of salt, not financial advice. This is just my own personal opinion. But, so far, if you follow my videos 7 to 8 months back, I haven't been wrong so far. And even if I was slightly wrong, I pretty much got it 99% correct. So it goes to show something. I would hope so. Highly recommend watching the rest of my videos. And before I go, guys, it will be a really big favor for me if you like press the like button, subscribe, ring the bell icon, do all that great stuff that YouTube wants. I'm trying to grow my community, and I really am making an effort to bring the information to you guys before it happens, so you know what is there to come and what you should do. Of course, do your own due diligence and make your own decisions with regards to your portfolio. Nobody will, be good to it as well as you will be. And with that in mind, guys, you have the wonderful rest of the week. Bye-bye.